You've probably seen influencers claiming you can write off your entire family vacation just by calling it a business trip. Or maybe you've seen that viral genius strategy about putting your family on your company's board of directors to make all trips deductible. But is any of this legal, or is it a fast track to an IRS audit? Well, the IRS has made it crystal clear in Internal Revenue Code 274, and today I'm breaking down exactly what works and what'll get you in serious trouble. I've researched tons of tax court cases and consulted with top CPAs to bring you strategies that actually hold up to IRS scrutiny. Let me tell you about the time I first learned how to turn a family vacation into a legitimate business expense. My two sons were just toddlers, and my wife Courtney and I wanted to take them to Florida. The sun, the beach, the whole deal. I'm talking to my accountant Jeff about something completely unrelated, and he casually asked, "Why don't you make it a business trip?" I laughed and said, "Jeff, I'm not hosting a seminar at Disney World while my kids are pulling me towards Mickey." But as it turns out, I didn't have to. Fast forward to today, and I've got the system figured out. There are ways to structure a trip that's both fun for the family and completely legal for taxes. And I mean actually legal, not that gray area stuff that you'll get flagged for. First things first, you can't just take a vacation and slap the word business on it. That's not gonna work. The IRS isn't stupid. Your trip must have a primary business purpose, and more than 50% of your days need to be spent on legitimate business activities. The tax courts have repeatedly shut down people trying to write off trips that weren't primarily for business. So, if your Instagram shows you parasailing and hitting the beach all week, but your records claim you were working that whole time, you're asking for trouble. So what actually counts as business purpose? Well, this includes attending a conference or a trade show relevant to your industry, meeting with clients or potential business partners, scouting real estate or investment opportunities related to your business, conducting market research, and content creation if it's actually part of your business model. My buddy Greg, the one that owns some commercial real estate, he wanted to check out properties in Miami. By structuring his trip around property visits and meeting with realtors, he legally wrote off his flights and hotel. Meanwhile, another coworker of mine, let's call him Josh, he tried to do the same thing by networking at a beach bar. Yeah, the IRS isn't buying that. Just look at Commissioner versus Flowers. The court shut down someone who tried to deduct travel in the name of looking for business opportunities. Now, here's a really helpful tip. As long as your travel days are reasonable for the trip, the IRS allows you to count them as business days too. This is important to understand. If you fly out on Monday and have meetings Tuesday through Thursday and then fly home Friday, that's a 5-day business trip. The entire airfare is potentially deductible. Just be aware that if you fly out excessively early or stay much longer than necessary, the IRS may question whether those extra days were truly for business. You can check out IRS Publication 463 for more guidance on this. Let me tell you about the weekend loophole, or the sandwich rule. And here's where it gets interesting. The IRS recognizes that flying home for the weekend may not make sense economically or logistically. So if you have legitimate business on Friday and Monday, your stay in between is likely deductible. For example, if you have meetings on Friday and the following Monday, you can typically deduct the lodging for the weekend in between, even if Saturday and Sunday are just personal days. This isn't formally called the sandwich rule by the IRS, but tax professionals often use this term to describe the concept, the basic idea. It's based on reasonable business necessity. Drop a comment if you've heard of this approach. Most accountants don't just volunteer this kind of information. Now, how about family? Can you write off your kids or your spouse's travel expenses? Short answer is, it depends, but usually no. Let me address something that's gone viral on social media: simply putting family members on your company's board of directors to make their travel deductible. While board members can have their legitimate board-related travel expenses, covered by the corporation, there's a crucial distinction here. IRC 274 states that no deduction is allowed for travel expenses for family unless they are employees of the tax-paying company. You see, board positions are typically not W-2 employee positions. They're usually oversight roles, and they're paid via 1099. This means for your personal tax return, family members generally must be legitimate W-2 employees with real business purpose on the trip to qualify for deductions. Even for corporate expenses, the travel must be necessary for actual board duties, not personal activities disguised as business. Tax court has been clear about what constitutes a bona fide business purpose. The work must be necessary to the business, not just helpful. And what qualifies as necessary work? Well, managing a booth at a trade show and actively selling products, performing specialized functions that directly generate business, actively working on business growth. What do the tax courts reject? Well, just taking notes or basic administrative work, socializing with clients or business partners, being a hostess or some vague secretarial duties. Going back to my wife, Courtney, she helps with my businesses, but right now she's not a W-2 employee. In fact, she owns her own business, which I've talked about on this channel, and she's amazing at what she does. So how do we keep it above board when she helps at events? Simple. I contract her services and pay her as a 1099 independent contractor. That way, she's legitimately providing a business service, just like hiring any outside professional. But the important distinction is that my business doesn't pay for her travel. Instead, her business pays for her own travel, and then her business deducts those costs as necessary for her work. The Internal Revenue Code and Treasury regulations provide clear guidance that if a spouse is just tagging along, their travel isn't deductible. But when they're working in a necessary role, being paid for their services and their business covers their own travel, that's a different story. Let's zoom out and big picture everything. If you structure your trip correctly, here's what you can typically deduct. Airfare for you and legitimate W-2 employees, hotel stays for business days, including those sandwich days that I mentioned, business transportation, we're talking rental cars, taxis, ride shares, business meals at a 50% deduction at the time of this recording, conference tickets and business event fees, and even business-related internet and phone charges. Pro tip for mixed business and personal trips, keep track of your expenses based on business days versus personal days. If you have a 7-day trip with 4 business days, you can deduct 4 out of the 7 days for your hotel. For transportation, if the primary purpose is business, you can deduct the entire cost of getting there and back. Let's keep it going with things that won't fly with the IRS if you try to deduct them. Theme park tickets, spa days, or other recreational activities. Family expenses, unless they qualify as W-2 employees. Personal shopping or personal entertainment. Lavish, excessive, over-the-top style spending. And extended stays without a business purpose. Easy rule of thumb, if you wouldn't pay for it during a normal business trip with a client or business partner, it's probably not deductible. Oh, and documentation is key here. IRC 274 requires adequate records or sufficient evidence, and this is strict. We're talking about a substantial requirement that's more rigorous than other types of expenses. Based on actual tax court cases, here's what you need to do to protect yourself. Receipts for everything, a calendar with business meetings clearly recorded on it, emails or contracts proving business purpose, conference agendas if that applies, names and business relationships of people you met. Even for business meals, specifically, document who you met with, your business relationship, and what business topics were discussed. You need to have solid proof here. So here's a real-world strategy that's a smart way to structure business trips. Let's say you need to attend a 3-day conference in Orlando. By scheduling bona fide client meetings on the day before and after the conference, you've created 5 solid business days. Your family, they can join you too. Enjoy in the hotel while you work, and you can even stay an extra 3 days for theme parks after your business is done. So with that example, what you can deduct is your entire airfare, because the primary purpose was business, 5 out of the 8 nights for your hotel stay, those were the business days, business meals at 50%, and any conference fees and business transportation. What you cannot deduct, family expenses, theme park tickets, and personal days at the hotel. That's the right way, clean, legal, audit-proof. So for a family member's travel to be deductible, they must be a W-2 employee, not just a board member. Their work must be necessary, not just helpful, and the trip's primary purpose must be business. For your own travel, more than 50% of the days must be business. Travel days typically count as business days, and document everything meticulously. Here's a little challenge for you. For your next vacation, research if you can legitimately add a business purpose. The savings could be significant, but the business purpose must be real. So, which approach will you take? The risky board of directors strategy that could land you in tax court, or the legitimate IRS approved methods we talked about today? If you found any of this helpful, then hit the like button. Oh, and my free step-by-step guide on making business travel tax deductible is down below in the description of this video, so check it out.